Good morning and welcome aboard. Welcome to today's Trade Along live session with Saul. Saul will be joining us shortly. Saul comes in right around the cash open. At that moment in time, Saul is setting key levels for this morning's trade for his own trading. He's going to give them out to everybody in audio. Be prepared to write them down. It's going to be a pivot and other levels on top and bottom of that pivot. We're going to go through the morning session together. This is a subscription service. This is a opportunity, twofold opportunity. One is to be part of this trade along for today. Subscribers are here every day, slugging it out with Saul as they trade along with him in and around his pre-mapped out levels from an educational point of view only. It's a great opportunity for traders out there to find a home where they can really buckle down and learn how to trade. Saul has a trading class and mentoring service. I call it a mentoring and training service, where he takes individual traders under his wing, teaches them his methodology, and then supports them in that methodology as they come into this trade along live session as a proving ground and an access point to him as they're applying their newfound trading skills. So I've got a discounted offer for you, which I'll send out now. Make sure that you are signed up for the service. Okay, don't be pikers. No pikers allowed. Piker is somebody that comes in and doesn't sign up. It's nominal. In other words, it's cheap, inexpensive, but not for the product. Christoph, I'm going to have to exit you unless you give me a high sign now that you're going to sign up. Hey, Dave. Glenn, Edward, you can always re-sign up. James, Joseph, KG, Micha. Hey, Pat, how are you? Philip. PH or P Hotmail, Rose, Terrence, Zahurl, how are you today? No high sign from Christoph, so we'll remove him. Hey, Joseph, how are you? Payman, welcome.
Good morning, everybody. Can everybody hear me all right? Let's give you our levels for this morning. Our pivot this morning is 43.77, 43.77. Quickly coming down here to support down here at 69, 59, 48, 39, and 27. Resistance on the upside at 86, 94, 44.04, 11, and 23. Pivot 43.77, support 69, 59, 48, 39, and 27. Resistance on the upside at 86, 94, 44.04, 11, and 23 as we are trading post Jeremy Powell's talk yesterday, and we talked about how we don't like to trade when Fed stuff is around. As you can see here, the big break in the S&Ps. Obviously, if you got short, stayed short, and walked away from it, you probably did all right, but the trade in the middle would have been a little bit tough. But we've always discussed how when the Fed talks, we definitely don't like to be trading around that time, and that was definitely the case yesterday after he was speaking, and he did speak like at 10 o'clock Chicago time yesterday, and at the downside, big push to the downside yesterday all day. As to what he said, as far as the market is concerned, I mean, all he did was reiterate his belief that they're going to have interest rates go up, and I guess he said basically that for sure there's going to be a 50 basis point raise, but the market already priced that in. So it always surprises me why in the world would the market react the way it did, unless it's very, it was up there on nothing. But it definitely reacted to him, I guess, saying that there's going to be a 50 basis point hike and that they were going to be very aggressive and they have more of a hawkish stance. But again, I don't understand why the market would all of a sudden think that that was surprise. Then again, I'm not here to try to figure out why the market does what it does. No, none of us are. We're just trading the opportunities that the markets gives us with the levels that we just gave out and the price action opportunities that occur. Again, the fact that we try to stay away from trying to guess which way the markets are going is what we try to do here. We're not trying to hit any home runs here. We're just scalping the market on an everyday basis with levels, and then we try to stay away, obviously, in the afternoon trade when the trade gets either one-sided like it did yesterday or very, very quiet. So that's what we do here on an everyday basis. We were doing okay in the morning, and then hopefully if you were with us yesterday, you did well as well in the morning. Now today with the added volatility, we're probably looking at 4 points, stops and targets. You can see how it's very fluid, the movement there in the market. So make sure you keep your stops in place. We're not going to be loving any opportunity that we're going to be trading here. All we're going to do is trade the market, trade at whatever it gives us or it doesn't give us, and look for the next opportunity. That's all we can do here. As it's getting a little bit, this is just chopping around here a little. So we'll see what goes next. All right, if anybody has any questions, feel free to ask in the chat. Welcome to some of the new folks that are here. We are trading mini S&Ps, so looking for opportunities to scalp. Again, with the volatility, because the market is down ticking here a little bit, we're probably looking at probably 4 points at least with our stops and pivots and targets. We're also looking for price action opportunities. A combination of both of those gives us our trading setups that we're looking for. As the market here gets a little bit slippery, coming down here to the 69 area. Again, we're not going to be perfect, so you're looking to scale in around the level. And how you scale in depends on volatility, a point and a half. Maybe if you don't want to scale, you trade smaller and just keep your levels, depending on where your levels are. We're coming down here to the 16. Advantage of the volatility here, if it gives it to us with these little bounces off of these levels. It did bounce down to 70 and bounce back almost to 74. Hopefully you were able to take, you have to put orders in place there to be able to take advantage of this quick market. That's all these markets when they get this way. Testing the 79 area as well as your stops. Your stops also have to be pretty much in place when the market gets down there and tests them, right? That's all we can do. And again, if you don't like the price action, like I said, and it's giving you a chance here to scratch, it's there too. And it's a very fluid market, very tough to trade. These are algo driven markets sometimes, and we are not fast enough to deal with it. So pick your spots, and here's a nice rotation off of our 69 area there. And if you are trading multiple contracts, maybe you're squeezing some up here to get a little bit more, but definitely had your 4 points off of our 69 and we didn't get stopped out down on the downside, never got down to 65. So nice little trade there for us on our first support level. Again, if you're trying to stay long, if you have multiple contracts, you're scaling out of them and you're putting a trailing stop maybe on anything else you have left over. But again, just remember, it's a very, very fluid market. So if you're taking your profits, then look for a next opportunity. And if you are trying to squeeze it a little bit, that'd be a nice little trade there. Again, we look for 4 points, at least with this volatility. And we are getting them. It's not like we don't get them, but there's a chance to be able to take more than that, depending on, again, like I said, if you're trading multiple contracts. If you're trading one lots, that's great. Nothing wrong with that. You just take your profits and move on. And we'll look for the next opportunity. All right. If anybody has any questions, feel free to ask in the chat. We did go down to our 69 area there and had a nice rotation off of it. That would be correct there, Terrence. I mean, these are areas of support that we believe the market will give us a chance to scalp. So those would be the support levels. Yes, those would be areas that I'd have orders in. And also at the same time, your exit strategy is also in place, whether they be targets or profit targets or stops. There are also price action opportunities as well, in addition to the levels. The price action in our education course, we've explained to you how to figure out where these levels are, why they would be important, how we would use them, how you'd scale in, how you'd scale out of them, and also the way to find them, and also discuss a lot of price action opportunities that are there. Once the market paints some bars, as we continue to downtick here, and support level we have is down at the 59. I will repeat the levels. If we can print the levels, we will. But I'll repeat the levels again. Our pivot this morning is 43.77. If you want to write these down, the support level on the downside would be 69. The next level on the downside we have is 59, and 48, 39, and then 27. Resistance on the upside would be 86. 94, 44.04, 11, and 23. All right, market continues to downtick here. Definitely nervous little market, as you can tell. Coming down here to the 59 area. Again, it's an area, so it's you are scaling into this area somehow, some way, and making sure you keep your stops in place no matter what. All right, getting a little bit of a bounce here off of our 59 area. Again, you can, if you're trading multiple contracts, you are, and there they are. If you look at the chat, you're going to find the levels printed there for you. If you're trading multiple contracts, you can scale out of them, so especially with the fluidity of the market, and especially because the market is under pressure, you have to take that into consideration. And especially it's early, also the time factor has to be considered. There's many things considered in how you scale out of a trade, and you have to, we're looking for 4 points, but if because of the volatility and you get a little bit less than that and you're trading multiple contracts, you definitely can take some profits and lessen the risk as we continue to slowly downtick here. Not slowly, but keep that in mind. I mean, you're definitely given choices here, how to handle a trade, how to manage a trade once you get into it. It's not just you don't have to just keep your stops in place and that's it. You can also scratch some if you don't like the way the market is acting around the level, especially because you have to know when, the time of day too. I mean, this is We talk about the fact that the first couple bars are always volatile in the morning. Obviously, there's a risk reward situation here, but the volatility is much greater in the first couple bars in the morning than they are as the day goes on. So you have to take that into consideration as well. And if you still have them and you want to exit some for a little less of a trade or scratch some, it's giving you that chance here. Okay, so you have to be able to manage your trades. You don't have to love every trade that you get into or stick to it when you have to wait for the stop to get filled. There's different ways of managing trades. Like I said, everybody does it differently. There's not one right way or wrong way of doing it. And like I said, you have to be able to take into consideration the volatility that's in the market. It is, isn't it? I'll tell you there. I don't blame you. Want to jump in here, Don? Please jump in. It's Friday after all. You're always welcome. We always don't mind to help on Fridays. I don't mind to help any day, actually, to be honest with you. All right, we're slowly kind of hanging here around this level. Again, the 59 kind of ran through it a little bit, but it also gave you a chance to scratch, like I mentioned it a few times. Next support level on the downside we have is down at the 27 area. 39. One more. 48. I'm really skipping ahead here. 48 level. You should have been out by that in that trade, whether you got stopped or you scratched some when it rotated back up there. And we'll look for our next support level down here at 48. Again, the market here is still reacting to what the confirmation of policy, which I think was already baked into the market. But like I said, what do I know? These things always surprise me that all of a sudden the market, he's saying there's going to be 50 basis point hike. But then again, I've been saying that for a while now, so I don't know what the surprise was. I wish I could have told you. But I guess hearing it, him saying it, is creating a little bit of a push to the downside as we're coming down here to the 48 area. Again, whatever the situation is, make sure you keep your stops in place. We're not going to love every trade. We're not going to love any trade that we put on. All right. Nice little rotation here against our 48 support area. Again, you are working and you're trading multiple contracts. You're definitely given choices here as to getting in and out of some of your trades. And if you got in at a lower price, you definitely got out all the way up to the there we go. That takes care of that. So nice little trade there against our 48 area. Again, if you're trying to hold on to a little bit more, then keep a trailing stop or manage it somehow. All right. All right. Again, we talked to you around the 59. We were telling you it wasn't as we didn't like the price action, or at least I didn't like the price action around it. I suggested maybe taking less than 4 points and maybe exiting some for scratch or even a little bit of a loss. Not sure, you don't have to keep it at 4 points, especially if you don't like the price action when it got down there. And then you wait for this nice rotation here off of the 48 and get a nice little bump up here. And again, you're scaling out of any multiple contracts if you have any. So nice little and this is happening, extremely quickly here. So you have to be, you got to basically have your orders got to be in place, because if you don't, kind of runs right through it, and you don't even get filled, and you're like, whoa, what happened just there? I just had 4 points, and now I got nothing. But again, you have to be, if the volatility is a little bit too quick, then you have to want to be a little bit patient. Things will settle down a little bit later this afternoon. We have a VIX is back up to 24 handle when we were down at 19 yesterday. So they definitely injected a lot of volatility back into the market this morning. Again, if you're trying to hold on to some stuff here, it'll be a nice little opportunity for you to take a little bit more than 4 points on your trades if you are trading multiple contracts. For conservative traders or more risk averse, I would suggest the first couple bars, maybe 2-3 bars, you kind of hold off. If you're a little bit, if you can't handle the volatility. So yes, and I've always suggested that if the volatility in the first couple bars is always a little bit greater, it's one of those risk reward type of situations, like I said, and 5-minute bars, right? So 2 or 3 5-minute bars. So market is going to the downside. There's always a lot more volatility, always, without a doubt. I don't understand. That's why, honestly, that's why traders like trade when it goes to the downside. But I don't understand why. I don't know why when it rallies, they suck the volatility out of the market. But it's always been that way. So yeah, especially when we're going to the downside, the first 2 or 3 bars is always a little bit more volatile, as you can see, and then things kind of settle in a little bit. But so there's always, and then there's always other times where if you're a little bit more, and then that also depends on the volatility on any given day. I mean, last week I would have said probably you could probably get in the morning because the volatility wasn't so great, and as soon as the market opened up. But today it's a little different.
Where's our little buddy at this morning?
Hey, there's Don. Don, welcome, Don. I don't know. I don't know. He doesn't. He doesn't have to tell me where he's going or not going. But yeah, I thought he was going to be here. Thanks, Terrence. Glad you could join us. This is Don. Don is a friend and another student of mine who took our course a few years back and has been with me since, and also helps me with the me talking alone by myself all the time once in a while, but especially on Friday we like to get different opinions and different thoughts about what we do here. And so in case you want to ask anybody else a question besides me, you can definitely ask Don. Donald's more than qualified to answer them, and in addition to the fact that he fills in for me when I need to take a day off or I'm not around or I have to leave early. So thanks, Don.
You're welcome.
How long has the room been open, Don? I don't know. Never heard of me before. Oh, that's good. I should talk to my marketing department to see why he hasn't heard of me before. Don't know. I don't know, Don. How do you think? How long have you been with us?
Oh, 4+ years.
Yeah.
Since I have to look back at my log.
Yeah.
Since probably 15, 16.
Mm-hmm. Well, your math is a little bit off, too.
Yeah. Years fly.
I know, right? It doesn't seem. That's right. I know. Anyway, so nice little rotation there against our 48. Again, if you're staying long or trying to stay long against one, you're staying long with your smallest amount and trying to take a little bit more and having a trailing stop. But you see these trailing stops are so large because you're getting 5-point moves in a minute. And again, the volatility is there. We talked about the VIX bumping up to 24, which is, if it stays in the mid 20s, it's okay. Once it starts getting a little higher than this, and the volatility, they really start spiking. I don't understand, Don, how they all of a sudden, all he said yesterday was that they're looking for a 50 basis point move, and the market went nuts and broke. I mean, this was already into the market. I don't understand what the problem was. I don't get how these people just, the market is so weird sometimes. I thought it was already priced in, that everybody knew there was. I mean, the bond market was already pricing in a 50 basis point move. I don't understand how the market all of a sudden was a surprise to it. But that's what happens. It's definitely what happens. Anyway, all right, now we're bumping back up here. We got resistance around the 75 area, 77, which is our pivot. If you are definitely, this is again, depending on your stops and where you put them, this is a nice rotation here off of the support level we have down there at the 48 area. And again, only if you're trading multiple contracts are you holding on to this stuff. And if you got anything left over, you're definitely going to get rewarded here with these quick moves. Your stops are the key, right? That's where you have to find out where you'd have to put them, and their stops, if you're going to stay long, or have to be pretty spread apart here.
Well, has your weather changed yet?
Well, yesterday was beautiful, like a little windy but nice, and then today it's a rain. Rain comes back, and then tomorrow it's going to be like 70s, mid 70s, maybe 80, they say. And then Sunday it's going to rain a little bit more, and then Monday through the rest of the week back in the 40s. So yeah, it's changing every day. It's not change. It's not change. It's changing every
Just
day.
changing. Typical spring. Well, I miscalculated that open big time this morning.
Yeah, well, again, that's the problem. You're calculating.
Yep, that's it.
Yeah, we let's try not to calculate around here, and that is one thing that we like to teach, is that we try not to come in with any opinions or calculations, and we try to have an open mind as to where the market, what the market might do. We're not trying to guess which way the market's going. We're just trying to find areas that we feel the market will give us an opportunity to scalp and trade off of, and that's what we try to do here on an everyday basis. I feel that every time we come in with some thought as to which way the market might be trending or going, we always tend to trade that thought in our mind.
Yep.
And you also get hurt and kind of miss what's going on that day.
there, I'll read you something I was reading the other day. Your biggest enemy in trading is going to be a directional bias, an opinion about the market direction, whether yours, your brokers, or friends. Shut it out. Learn to concentrate on the right hand side of the chart.
That's right. That's right.
That's so true.
That's true. That's true. We can't. I mean, yesterday's move it was a big move, but I mean, you had to be. I mean, if I thought that we were going to break, I would have told you guys. I always keep saying that. It's when the market opens up and starts moving one direction or the other, and I always say, "Well, you didn't tell me. Like, how am I supposed to know?" So all we can do is trade the market, whatever the market gives us. If it's trending one way, then try to find a good entry point to jump on that trend. As long as it stays below certain levels or above certain levels, and you can catch a little bit of the trend that way. But and there are ways to manage that or get into a trend moving a market as well. So again, everything here is dependent on individuals' risk tolerances, and everybody does trade differently. Nobody here trades all the same.
In this thing, they got a quote from this guy. He's Joseph de la Vega. In 1688, it was an early manual on trading. It says, take every grain without showing remorse about missed profits, because an eel may escape sooner than you think.
That's right. That's so true. I mean, we definitely, a lot of traders always tell me, I should have taken, I only took 4 points out of a trade. I should have taken 10. You can't worry about it. You just got to look for the next trade.
Yeah. It adds to your pile.
Yeah. Yeah. So after a while, you do realize that you're going to have enough trades. I mean, I've been trading for a while now, so I don't have to worry about taking every trade. Definitely. I mean, I want to trade every trade only because I sometimes feel like I get bored, especially when you're sitting around, when you're sitting around on your computer and you're watching the markets move around. But then I realized, once I started trading online and got out of the pit, that I just can't trade every trade or every opportunity that's there, because you just have to pick your spots. And that's what we do here. We try to find spots that we feel will give us a good opportunity to trade. And look, and even those spots sometimes are not going to be good. You have to sometimes work them and get out of them and look for the next opportunity. But patience is very important. We stress this every day here, especially when the markets are slower, and they have been slower. This last couple, yesterday, late afternoon, prior to that, we've been very, very slow. I was talking to everybody about waiting for opportunities, because they were not going to be there. They weren't presenting themselves as quickly as they are today. And so you have to be patient and wait. On that front, we like to average about 4 or 5 trades a day. We focus more on the morning hours to give us our opportunities to trade as the market continues to downtick. The next support level we have is down at the 39 area.
I got a question for you. Mm-hmm. And you may not know it, but I track mine. I can go back and I can get a good runner, make really good on a big home run type trade. But when I go back and I add it all up, you're only averaging about 3 to 5 points per trade.
Mm-hmm.
Does it seem about right?
Yeah, I mean, I think that would be a good target overall. I mean, that's why we talk about 2 to 3 points. I think if you're consistent with what you do, and that's the key, to be consistent, then it doesn't really matter if it's 5 points or 3 points, as long as you feel like you can make a little bit of money every day.
Yeah.
And I think that gives you confidence the next day and the next day and the next day. And that's the key here. That's what we're trying to do, is instill confidence in your trading and your choices. And that's the hard part. And the recognition of those trades when they appear to you are important. And also the fact that how to manage those trades are important. But yeah, I don't really track as to how I don't,
Well, I don't track it every day. Just every now and then I'll
yeah.
pull up
No,
the
I get
thing
it.
and I'll look at it and I'm going, well, why sit through all that grief trying to hold on for, just go ahead and take 4 or 5 points and wait for the next trade.
Right, right. Again, you're not holding on to everything, right? I mean, you're holding
Yeah.
on to your small amount, and
Yeah.
I mean, it's one of those things where yesterday, because of the trendy market, and it once, if you noticed yesterday, if you got below the 5-minute band there on the hourly, there, you never really got in trouble if you just put your stops above the 5-minute, above the blue band. But you had to manage it, and you had to step away from it, and you didn't have to. You couldn't be watching it because then you get into the habit of wanting to trade. As we can see here, we're quickly moving in what is this 15-point bars here in a minute. So we can see the volatility is definitely in the market here. There was probably a number that I forgot to mention. That's why this bar was a little bit crazy, but it was. Excuse me, not in, we didn't have anything on when that was coming out. Let me see, I should have mentioned. No, there was no number, so I don't know. It is a 9 o'clock bar though, so I don't know why it got so whippy. Oh, let's see.
I wonder what kind of time frame the algos, or what kind of. I'm assuming that they're designed to build, make a half a point 99% of the time.
Okay. Well, not a. Those 10-point ranges that you were talking about way back when.
Yeah.
Okay. Maybe 20. I think then you're looking at a different market, a different trade. Nowadays, you're definitely looking at. You can't be looking at 2 ticks. It's not happening.
Even now when I turn my chart on, this thing automatically sets up at about a 10-point spread between the numbers.
Mm-hmm.
And where they used to, it would be 5, 6 points.
Mm-hmm.
And,
well, I've been leaving it at 10 points.
Yeah.
So this rotation, the rotation in the bond market over the last few months has created a little bit of a problem here, a dilemma, I should say, for the stock market, because it used to be that the stock market, when the market used to go down, the stock market, the bond market would be a haven, like a safe haven. But that's not happening. So this area, this situation, and that we're living in with interest rates doing what they're doing, is creating a little. Where do you put your money when you get out of the stock? So, except for obviously when I say that, they're rallying here, but the bond market also been taking a beating lately. It's the 30-year actually ticked up above 3% for the first time in a long time here. So definitely having a little problem here with where to put your money after you get it out of the stock market. All right, they went and retested that 48 and it's very, very choppy here. Be very, very careful. This is what I like to call the no trade zone right now, because it's just flopping back and forth, going nowhere fast. So you have to be a little bit careful here with even the range game is tough to play here. Your stops in the range game would probably be in the vicinity of 5 points or something. It's all goofy, very tough.
We didn't get back to 96 last night. I mean, we should have.
What they get to 90, 93.
Yeah, 93. So it's going to be interesting to see if they're going to push it up there today.
We got a little resistance up here around the 76 area, 75 to 74 to 76.
And then we got to fight with that blue band.
Yeah, I see you're looking for it to go up. Yes. All right. Again, like I said, this is like what I like to call a no trade zone because its market is just chopping around here. You're getting caught both ways. You're going to guess as to which way this thing wants to go. Let's see, 75 basis points is now the new 50 basis point. A reluctantly hawkish Federal Reserve is ramping up market expectations for big interest rate hikes that would have been considered unthinkable and market crippling just 2 months ago. Well, okay. The FOMC will hike the Fed funds rates by 75 basis points in June and July after a 50 basis points in May, says some bank. That would bring the rate up to 2.25, a phenomenal amount of tightening given the Fed is still easing by buying assets as much as recently as March. The shift in market expectations for even more tightening came after Fed Chairman Powell said at the IMF debate Thursday that a 50 basis point hike in March was on the table, perhaps even more pertinent into the market. He said that there were some merits into front-loading tightening with current upside risks to inflation and a historical tight labor market. Okay, there you go. Every word he says, they look at as try to decipher and what it means to the market. Yes, we do teach how to find the levels. We also teach how to manage the levels, and depending on your risk tolerance, we show you how to find price action opportunities. We try to explain to you different aspects of technical analysis that you could also use for other markets as well, and the ability to know when to trade, when not to trade, and recognition of those trades when they present themselves. All of that is we talk about it in our education course, which, by the way, we are going to have a class for those of you who are part of our education course. We're going to have our class later on this afternoon at 1 Chicago time. I'm sorry, 12 Chicago time, 1 o'clock Eastern. And so those of you who are part of our education class, we're going to have a class later on this afternoon. We also use live charts to explain the concepts and ideas that we teach. So that's why we use this room to do our classes in the afternoon, since we try to stay away from the afternoon trade anyway. But at least we can go over the concepts and ideas that we teach using live charts, so that you know that I'm not making stuff up. Anyway, but that's what we do here in this room in our education course. So we have this trading room during the day, and then if you part of the education package that we have, you get that, and obviously get to understand some of the concepts and ideas that we're trying to shoot for when we're trading. And we do that here in our Zoom room. Let's see. Traders quickly priced in more aggressive hiking as Powell spoke, with the CME Fed Watch now pricing an 85% chance that the benchmark rate will rise to a range of 150 to 175 after the June meeting. That would mean a 75 basis point hike in June if May gets the expected 50 basis point move. A chatter of a hike of as much as 75 points started last week when St. Louis Fed Bullard said that he would not rule that out. Before Powell spoke yesterday, San Francisco President Daley added some fuel to the fire, saying that they would be talking to colleagues about whether a hike of 25, 50, or 75 basis points was needed. If the Fed funds futures, the market is now pricing a 270 basis point tightening for 2022. Topping a 250 seen in topping the 250 seen in 1994, with expectations now that the rate will hit 3% by March of 2023, in about a year, according to Deutsche Bank. The Deutsche Bank chief economist also said yesterday the Fed could continue hiking rates up to 5% by the time this is done, a level not seen since 2006. I didn't know that 2006 was at that high.
What was it back in the 70s, 80s, where it was 15, 16%?
Yes, in the 80s, right? 70s, late 70s. Yeah, they were, when you can go and get a CD for like 20% at the bank.
Oh.
I remember those days. I remember those days. But
yep.
Yeah. And then, but they went down pretty fast, and then it kind of hung around like in the tens, 8%, 7% for a while there. And then they slowly again, there was room at when the rates were at 7%, 8%, even 5%. And when they had a stock market that was going down, you had a place to jump into the bond market. Right now, you got, the bond, if the stock market goes down and they're expecting this big move in the bond market, there's no place to put your money.
How did the guy put it? We live in interesting times.
Live in interesting times, yeah. Yes, it's a very interesting time. All right, Terrence, you definitely could tell them about our room here, that's for sure. What have you been trading? All right.
I look back at all the systems, and really and truly, they're all probably about worthless unless you throw some money management in there with them.
Mm-hmm. Well, that's when I transitioned here to, that's all it is. This is all money management, right? Being patient, waiting for opportunities, keeping your stops in, not trading this choppiness. It's all basically money management, right? I mean, that's what so in a goofy sort of way, that's what we're kind of trying to tell you. Pick your spots. It's all money management. Yeah, not over trading. And it's very easy to do. Yeah, I mean, the NASDAQ's okay. I mean, the ES at least trades well technically. And that's why we kind of stick with the ES. There's a lot of volatility. It technically does trade well, and that's from once we've gone to trading off the floor and getting into the into electronic trading here. That's the only thing you could ask for. Is at least the market that trades well technically. So it used to be the bond market. I used to trade in the bond pit, and the bond when they started initially, when they went to trading on the screen, bond market used to trade well technically, and then all of a sudden in 2007 and 8, when the Fed started doing all their quantitative easing situation, they started taking over the bond market basically, and it doesn't trade well technically anymore. So got off of that.
Well, if we happen to close down here, this will be the first time we close below that big old bar from last Tuesday.
Yeah, well, we closed above that, right?
No, we didn't.
Yeah, sure we did. Yeah, sure we did.
But we went above it.
We closed above it last 2 days. From last Tuesday, yeah.
Not my charts.
40. It was 44.
66.75 was the high.
40, but it was a 44 handle.
Yeah, it was a 44, 66.75, but the close, I don't show a daily close above it.
Okay, yeah, I see that. Yeah. All right, the market continues to be put under pressure here. Again, next support level has down at 39. We use the bond chart as kind of a. So sometimes we get inverse relationship. Sometimes we get the market going the same way with the bond market. I mean, obviously, over the last 2 months, the reliance on the bond market has changed. So we used to look at it more as a area where you can, look for. Sometimes you get a better ending, a little help in the equities from where what the bonds were doing. But like I said, lately, we have gotten off the bond bandwagon. Anyway, I mean, on a personal, I used to trade in the bond pit, so I like to have it up there because it makes me feel better.
I look at it and I'm going, I don't understand.
Yeah, so it just makes me feel better that we have that. It makes me remember my youth a little bit.
I thought we just put it up there so people would ask questions about it.
Yeah. Why is the bond chart up there?
You know, when you first started, you used to give levels for the bonds and the ES.
Yes, we did. When we first started, we used to trade bonds too here, and we used to give levels for bonds and S&Ps. And after 2000 and when they had the financial crisis, and like I said, the government decided to buy every bond that's out there, and they could do, which they did do, and they continue to do until just recently. Okay, we have a nice little rotation down there, continued rotation. We're looking at the 38 area next. So once they started doing that, it became a very tough market to trade. It doesn't trade well technically anymore. So, all right, good. We've gotten short anywhere. Well, I was looking at the 74 area as an area where I would have liked to gotten short about 10 minutes ago, but we never floated up there. So I couldn't say that I don't like to pick spots. Like if you told me it was going to stop at 68 or 69, I would have said, okay, but why? And you wouldn't have had an answer for me. And I would have said, okay, well, I'm not trading. At least I had a reasonable area around the 74 area, 74 to 77 area, like I mentioned, but it never got back up there. And as we come down here to the 38 now, we're going to test this. Again, we're talk about scaling in. If you're trading multiple contracts, if you're trading just one contract, that's fine too. Everybody here trades differently. Nobody here trades the same. And so you have to understand your risk tolerance and trade it accordingly. And understand who you are as a trader. You don't have to trade like me, and I don't have to trade like Don, so.
You should be thankful. I think I'm going to change my name to Wrong Way Joe.
Well, we're coming down here to the 38 area. I'm going to test this here a little bit. Again, managing your trades is important. How you enter and exit your trades is definitely, there's no set rule here as to you have to do one thing or the other. You have to look at the price action and then determine how you're going to enter and exit those trades and how you manage those trades. Definitely fighting this 38 area here a little bit. 39 area. Oh, I got the 38 also. That's why. All
You got the 37.
You got 37. Okay. Well, give us a little bit of a pop back up again. You have to manage it according to that makes you comfortable.
Somebody's got about a 250 lot sitting there at 37.50.
Yeah, well, you definitely don't want to see them take it out. But they will. It's like somebody's eyeing it. You can see here they're going back and forth against this 39 area that we have. So there's a little bit of support here, depending on how you want to trade it. It's not running away from you. And don't like the price action. If it's hanging around here too long, you want to, if you're trading multiple contracts and you want to exit some. There's an inverse correlation between oil and ES as of when. That never usually is the case. The oil, let's put it this way. Oil has always rallied and we've followed it, to be honest with you. And I think if you look at the bigger picture, the fact that the oil is up at 100, I think is one reason why this bond market, this S&P market is not down a lot lower, honestly. I think it is actually keeping, there might be a kind of a inter-day or lately it's been that way, but historically it's been quite the opposite. And I'm not saying it's not happening. That you could be absolutely correct right now, but I don't follow the oil market. I don't think it's a good tradable market. I know a lot of people like trading it. I just not my favorite. One of my best friends trades oil. I've been trying to get him to trade S&Ps for a long time. He won't budge. Well, when I see a bounce like this one, we're not getting a quick rotation. I'm definitely lowering my profit targets a little bit and taking a little bit less because I don't like the time factor involved here. And the longer we kind of hang around an area, the more of an opportunity it would be for it to continue to do what it's doing now to go through. So I'm looking for an initial bounce and then managing that trade after that. If I'm getting a little rotation here, then I'm probably maybe taking a little bit less than my 4 points and being happy with the fact that, look, when the markets are a little bit slower, like as of yesterday morning, we were looking at 3 point to 2 point rotations on our profit targets. So there's nothing wrong with taking 2 or 3 points off of a trade. And when the market's doing this, where we're not getting the reaction we're looking for. But again, if some of you want to just keep your, there's no, and nothing I say here is etched in stone. You have to manage those trades according to you so that you can, if you're trading multiple contracts, you get out of some at 2 points, maybe some at 3 points, and then see if you can, even if at 1 point, if you don't like the price action, you lessen your risk. All right. At least you have a little bit of a profit in there and try to, and then manage the rest of it. That's because you don't like the price action when it was kind of staying at that level. But we are getting this little rotation here and getting a nice little push. Now remember, everybody scales in a little bit differently. So, your scale could have been 30, 40, and then 39, maybe 38, or maybe you did 39, 38, 37. Depending if you see where it's at and how the trade is developing, everybody scales in differently. And so you're getting different opportunities for everybody. But you can see the price action. You can see how it's kind of hanging. It's trying to push up. It made a little push down, got a new low there just to rally it back up because it got everybody short there. So if you did jump in there and hopefully you were taking some profits when it rotated back up, that's fine. And again, we do have a time factor that we talk about, that we, when we discuss some of the trades that we put on, is how long do you put on a trade and how long do you leave it? That's not as relevant these days because the volatility is so great that we usually doesn't really hang around like it is right now. This is like it's been here for like almost 10 minutes, which is very rare, by the way, once we get into a level that it hangs around for 10 minutes, but that's what it's doing. It's actually creating some value here at around the 39. If you look at the price, that's actually the volume that's traded at the certain prices. So 39 is a good area. At least there's some bulls and bears fighting it. And that's why it's kind of stopping here. And that's why I guess we had it, but we got it from the technical analysis that we do. And so consequently, gives us a fair chance to make those decisions as to what we're going to do with the trade once we get in it. Cumulative candle delta. No idea what that means. As you can tell here, we don't have too many indicators that we look at. We feel that indicators are laggers. Consequently, we just kind of focus on the price action, what the market is telling us at a particular moment, what the volume is doing at any particular price or area kind of helps us. And any indicators are laggers, so we kind of stay away from that a little bit. All right, and again, a little pressure here on the market. We talked about exiting your trade there for a little less than 4 points. We did get up to 42 and change, so we almost got our 4 points there against the 39 area. Hopefully, had some orders in there to exit if you are trading multiple contracts, or we suggested getting out of it prior. But this 39 is definitely, keeps coming back to it. Definitely a little area of support in here if you see the way the market is kind of hugging back to it. So hopefully, if you're trading the level and you're trading the trade, you're managing it here a little bit. Again, different ways of handling it, different ways of managing it. Hopefully, we're able to exit someone and got up to 42 and change. We almost got our 43 there. But still, if you didn't, it's if you still have any, it's still giving you a chance to scratch some as well. So, all right, Don, let me give you some more levels here. I don't know if which way we're gonna go, but let me give you a couple more levels here to the downside that maybe you can print up there. Below, next level we have is down at 27. Below that, we've got 14.06, 42.95, and then 84. All right, those are the additional levels that we're going to post up as some support areas. Again, I don't know which way the markets are going to go when we start trading. I've added more levels to the upside when the market decides to rotate up, but we added market and now levels to the downside because the market has proceeded to push here to the downside. And we're going to show those levels up here in a second. There they are. Less than a second.
I'm not quickest, Mark.
That was very impressive. And if you look at the chat box area, you will see the levels that we gave out this morning as a guide to the day. They're a guide. We can definitely add to them, subtract from them, like I just did. We can tweak them. We can adjust them because, the price action is dictating. Sometimes we delete them even when we're trading and we see that we missed it by where our entry point should be and we just missed it, then obviously the level is not going to work. So we have to all of this stuff that I'm talking about, the levels, when we add to them, when we tweak them, when we adjust them, are all talked about in our education course that we offer. All right, let's see here. The sell-off in treasuries, bond market accelerated the expectations of even more hawkish policy rose. The 10-year yield hit 2.95 at a high of the day, Thursday, and is back up at that level this morning. The 2s to 10s curve flattened. The 2s is up 7 basis points to 276. So they are, 19 basis points apart, 2s to 10s. Again, the fact that the steepening of the curve or flattening of the curve means an inflation expectation or hard landing or soft landing. All of that stuff has to deal with the bond market, and obviously will eventually seep into equity market at some point. That's why we talk about bonds so much. I mean, yesterday my wife in the morning asked me, why is the market up? I go, I have no freaking idea. And then Powell came out and started talking, and she goes, well, I guess you were right. I go, what do you mean? Because I went to play golf, of course. It was 75 degrees here yesterday, and then today's raining, pouring. So there goes that idea of playing golf this weekend. The market was down a lot at the end of the day. So worries will increase in equity markets if the Fed slams on the brakes. Well, I think they've slammed down the brakes pretty tightly here.
What amazes me is that before the market even opens, you throw these levels out there, and then you watch it trade for the next 24 hours, how it reacts around those levels. And it's kind of like they're there, but you don't see them when you don't know about them.
Mm-hmm. Mm-hmm. Yeah, they're there. I mean, well, since we're actively trading, we can, and we use them. But if you're not trading, you're not really focused in on it. You have no idea what it means. But we're trading every day. All right, so that's that. Bond market kind of rallying here a little bit. I mean, they had a nice rally the other day, and I said it was probably a little, dead cat bounce rally, only because they bounced, they killed it the following day. It's got no place to go, those bond market. Here's the rally. Here's the push that I thought that we were going to get off of that 39. Of course, it kind of hung there, but the fact that it hung there and created value at around the 39 is a good mindset as far as support. It hung there. It didn't get away. The volume around that 39 kept building, even though it traded above and below it. And then finally, the bulls won the battle of the 39 here and pushing upward here a little bit. Right now, we got support, a resistance around the 62 area, 62 to 65 area. I mean, this is almost to the point where we, still, we could go a lot lower before we have a bounce in the equities here.
If you look at that bottom on the 5-minute chart, those two bars down there, and you look at it on a 1-minute chart, it's just going sideways.
Huh. Yeah, well, that created the value there. A 1-minute chart. You're the only one that has a 1-minute chart. I'll be going nuts with a 1-minute chart with this market. What happens when the VIX is up at like 30? How does that 1-minute chart look?
Great. You can get a whole lot more than 1 or 2 points out of a 1-minute chart then.
A 1-minute chart. Jeez.
Well, I do have a 15-second up too.
Oh God, I can't even imagine.
You know, it works. You know, I'm working it basically the same as I would a 5-minute chart.
Yeah, I mean, if you're looking from a technical point of view, yes, but it's moving very fast. You are definitely not holding it for 3 or 4 points. If you're going to be trading that, you're in and out very fast. But then again, this is what we're trying to stay away from here. I mean, just because Don trades it doesn't mean that everybody has to trade. We're trying to minimize our exposure to giving the brokerage houses money for fees and stuff and the exchange. So we try to look for 4 or 5 different trades a day on average. Obviously today, well, we haven't really had any good price action opportunities yet. Sometimes we get more price action opportunities than we do levels. Today, we just kind of, when we get this one-way trade here, at least for the time being, it's a little harder to find those price action opportunities. But we look to average about 4 or 5 trades a day, and that way we stay away from losing too much money on brokerage fees and stuff like that. But if that's not a problem for you, then fire away. And you're talking to a guy who used to trade a lot. And for me to tell you not to trade that much is very hard for me to do. But that's what you have to do in these markets. Getting on the screen is not overtrade. Sure. You have no problem. That'll come up in a little bit. Brad, who's that guy with those goofy glasses? He will repost the link. I have trouble doing that, so he'll repost the link in a little bit. Oh, speaking of, there it is. All right, we continue to down tick. Next support level we have down here is down at 27. A nice big order there. 500 lot there is coming in at 175, as you can see. Now that's an order down, right? Not like that little 250 lot order. This is an order. The mark would be telling you to take it off right now.
I like the 27. I don't know that I like the 31 that much. Of course, it doesn't matter what we like.
Mm-hmm. Right, it's true.
Looks like he's trying to front run that 30.
I don't know. He's got another 200 lot there at 30. If you look, if there's a little bump up there at 30 as well. Okay, if you front ran the order there, you're doing okay. If you put an order there at 32, you got a nice little pop back up here. So this is a way, again, this is a price action play. If you're looking at your ladder ticket, you want to, that's a really tight stop. You're looking at like a 1 point stop for that in case it gets through that big order. And the risk reward on that little trade is obviously there, but you had to, react quick to it. You had to see that there was a big order there at 175. And the market actually reacted to that. I'm surprised. But sometimes it works. Again, it's one of those things that doesn't work all the time, but if you keep a tight stop, you're minimizing your risk, and it's worth the 4 or 5 points you might get out of it.
I think a lot of problems coming into it, especially when you're a new trader. You're trying to only cherry pick the profitable positions, and that's impossible. We don't know.
Right.
We don't know where they're at.
Right. That's well, I'm not. You're right.
Yeah, and so we just have to put on a position, put in a stop. And if we're right, we made money. If we're wrong, we got a safety net. We go to the next trade.
All right. And we do have, confidence in what we do. So
I think that thing you told me when I first started made more sense than anything. This is the only difference between you and me is I believe in the numbers. And it's so true.
Mm-hmm.
I used to work with a guy. He was an electrician, and he'd walk into a house and he'd wonder, you'd say, okay, is that hot? He'd lick his finger and stick it in the socket and see if it was hot. I'm going, how do you do that? And he said, well, you just get used to it.
Mm-hmm.
And I think that's kind of like these numbers. You just got to get used to them.
Yeah, that's true. You have to, the more you work with the levels and the more you see they work, the more confidence you get. And obviously, we talk about having recognition of the trade. Basically, what I mean is having a recognition of the levels, finding them, and being able to trade them and with confidence. And as long as you can do that, you'd be okay. And basically, the next hardest thing after that is basically how you manage those trades.
Yes. I'm to the point now to want, my initial risk is highest when I put the trade on. And as soon as it goes in my way, I'm sucking that stop up. I don't care if I get, if I make one tick, that's okay.
Mm-hmm. Let's see, there's a different way of trading, but a way that works for Don.
I don't want to be caught. For me, I've been caught too many times trying to hold for that longer position and trying to fight that blue band and all of that. I'm going, no, just take your profits, get out.
Mm-hmm.
It's trading's kind of like streetcars. There'll be another one along in a minute.
That's true. That is so true.
I guess when you first start let me ask you this. When you first started, did you think all you had to do was buy it here and sell it there, and that would be pretty well it?
When I first started, I had no idea what the hell I was doing. I didn't know what was what. I remember getting thrown to the wolves in the pit there, and I didn't know how to card up a trade. I don't know. I knew the concept of buy low and sell high. That's about the only concept I knew. And I knew when I bought it at 3 and sold it at 1, it wasn't good. And then after a while, you just start trading and you're not thinking about the trade. You're just thinking about your position, what the market's doing. And if you are looking to get out, then you look to get out. If you're looking an area to get in, you find an area to get in. It was different. I mean, it was different. And then now, at least we put everything with our education, we put everything to a methodology that makes sense. At least that's what we try to do. We're putting everything in so that the market moving around, the numbers flicking around makes sense a little bit. That's basically what we're trying to do here, is just make sense of the market moving around. And we're not trying to find direction. All we're trying to do is find trades that make sense to us, that we know work in the past, have worked in the past, and then trade off of that concept. Because really, when I was standing in the pit, you had a better feel for what was going on, how the market was going to go up or down. You have no feel here. All you can do is see a bunch of numbers on a screen, trading, flickering, and it doesn't really give you much of a feel for anything. So the only feel we can get is finding areas that we feel will give us a play, an opportunity to make money, and then trade that area. And if we're wrong, it's okay. I've been wrong, traded many times in the pit, and I've been wrong. And you just get out and you look for the next trade.
Yeah.
And then, like I keep saying, the key in trading is to make sure you come back tomorrow.
Yep. I look at, I don't guess there's a week or day that goes by that somebody's not sending me information on a new trading system, new this, new that. I can, and in all fairness, they probably all work for those folks. But it's just, can you jump in it? And I know even in this one, when I first started, it was hard. Mm-hmm. It just, I thought I understood it, and yet what we do is, I guess it's simple what we do, but it's learning to believe in it.
Mm-hmm. Right. Absolutely. Yeah, you'll get an email every day with the link to get into the room, and that way you'll be able to just click the link and get into the room every day. Welcome there, Terrence.
I think I need to go to blue band school. It looks like by now I would learn. I going.
Yeah, you're a non-believer.
Well, I get to trading on that right hand side of that chart, and I'm not paying any attention to that blue band. And next thing you know, where did that come from?
Yeah. Yeah, I get it. All right. See, a little bit of the volatility has been sucked out of that 800 lot is still down there. Somebody is trying to climb there at 32 and 130. Well, actually 175. Again, if you went to the well there already, then you did good buying, front running that order. And then you keep a tight stop on that, but now I wouldn't do it anymore.
Are you seeing an order sitting at 30?
There's a 200. There's a 200 somewhere. I think there's a big 200 lot order there. And when it clicked down there, I saw it.
That 800 lot must be running front running the 200 lot.
Yeah, he's backing it up a little bit. Well, it's holding the market up, whatever. At least for a time being. What do we got? 27. That's the next support level we have.
It's either that or they want to take it down, and they had to go up top to get enough ammo to break that 800. But there's a lot of hundreds below that.
Well, they're kind of. It could be all one guy. You never know. They're going to take it out. They're taking it out right now. There's always a saying that came in the pit. A market always goes to the orders.
Yeah.
And so the market's coming down to this order here. Now it's going to go through. Or the bears are trying to push it through, trying to take them out. And there it is. Somebody did take them out. All in one felt swoop. He was there. Somebody was eyeing it. You know what I mean? Somebody was definitely eyeing it. And there we go. A rotation back up. It always happens, at least initially.
Well, something like that, what can you expect?
Well, here's what
2 to 3 points.
Yeah. I mean, yeah, you 2 or 3 points. You put the order right under it because you have all those guys who have the stops right under it, right? Because they're using it as a backdrop. And then you're going to see the person who sold 800 lot or whoever needs to keep selling. If you don't get the follow sell through, then you're going to have a little bit of a pop back up because, but still, it seems like there's enough sell here. We're going to look at the 27s, our next order support. But initially, when it first happens, you get that sell, they hit it. And then if you don't get the follow through, the guys who sold through it, because they're all looking at the same thing, are saying, oh, God, all right, let's see if we can get through it. We're going to keep going lower. Or then it doesn't go lower, then they all run to the exits at the same time.
And that forces it back up.
Forces it back up, right. I mean, they were thinking, oh, somebody wants to sell 800, there's going to be more behind it. And there is more behind it. But he also has a 200. You could see he's buying it in like every, he's got a couple hundred lot there every point or a point and a half. I'm not saying it's the same person. I have no idea.
Yeah. I wish we knew if they were buyers or they were just getting out of positions.
Yeah, well, that's the big problem with putting option orders on the screen, because sometimes you could tell these fancy option plays that they have, these condors and fancy names for these option positions. And if somebody needed to put this big option position in, you could tell that it's this guy's option position, and they didn't like that. So that was the reason that it took so long to put option positions on the screen, and they still do have option pits and on the floor.
Question for you. If you were trading an option on the ES, what option would it be?
Well, they trade when they would trade it at 400, let's say
No, I'm
4,400.
talking about what would it be the?
Oh, you want to know which way I would go?
No. Which, like, if say, okay, I want to trade options on the ES. What would it be? The NASDAQ 100s? Would it be a
No, they have
the
options.
SPX?
Yeah, it's on the big SPX, right?
It's SPX options.
Yeah.
Okay.
Yeah. They don't have options on the minis. It's just the 500.
Okay.
And that was a robust market on the floor prior to us closing. That was the one market that was creating a lot of volume on the floor.
And it was a little bitty pit.
It was a bit, but it created a lot of action there.
I mean, compared to the S&P pit, when you looked over at the option pit, it looked like somebody stuck them in the corner.
They did, but it again, the option, that's true, because you got to remember when they had the S&P pit, a lot of traders were in there, right? And a lot of people also, a lot of traders, when you first start out, you don't quite understand options and you don't quite understand the different ways they trade. So it was a lot of people, it was much easier to trade futures than it is to trade options and futures, or any options actually. Those classes that you go and learn options in there is very involved. It takes a lot of time to understand all that stuff.
When I first started, that's what I did. I took an options course. I took the course and never traded the first option.
Yeah, the options classes, they did a very good job of marketing, actually. They were all over. When people didn't understand that the difference between trading futures, everybody had this notion that futures was very risky. Of course, it's very risky. But options also, you require a lot more capital and take a lot more time for those trades to develop, and your capital is like held on to this stuff for a while, unless of course you're selling the premium. But but still, it's also risky, because when you sell the premium, it's open-ended risk. So yeah, it was a lot easier for people, to think it was a little safer. But again, the amount of capital it took to hold on to those option positions was large. Let's see. What do you think about the footprint, order flow? Nowadays, people, footprint and order flow. If you're telling me that the footprint and order flow means that the quantity that's traded at each particular price, would that be footprint? Guessing. We do look at order flow a little bit, but it's kind of hard, especially with the markets trading with the algos that are out there. Order flow sometimes is kind of skewed for each particular moment. Besides that, as you can see, they kind of jump like they just did a second ago here. And it's very hard to get a gauge as to order flow. Are they really buying it or selling it? Somebody wanted to buy a 300 lot, it would jump at 4 or 5 ticks. And so order flow with this kind of market is kind of tough to kind of visualize and even kind of get a grip on, I think. The delta, yeah, well, now you're talking about, risk and look, if you try to focus in on a lot of things, then you're not looking at what we're looking at with price action. Okay, I'd rather look and see that there was an order down there, that our 39 was holding earlier, how the order flow was going in at that level, and then make a determination from there as to what position you were going to have or hold on to. Start getting into deltas and this and that. Now you're starting to look at Look, I'm not saying it's a bad thing at all. I'm just saying for us, for what we do, we're just trying to wait for areas that will give us a chance without trying to think too much. Because I think if you overthink when you're trading and you expect something to happen and it doesn't, then you're like, well, my delta is telling me this and this is happening right now. And so you're conflicted. And what do? Yeah, I keep it very simple. I've learned that I have to try to keep it simple here. If I give myself involved too much information, it'll screw me over. So we keep it simple to support levels, resistance levels. We try to understand why they work and how we manage them. The hardest part here is to manage your trade once you get into it. And again, do you trade multiple contracts? Do you trade smaller? You have to know the volatility. Maybe when it's more volatility, you're trading small. Maybe when it's higher volatility, you're going to trade less. All these things are part of your trading process that you have to manage, which I think is hard enough to do as it is. Well, that's very good. This is perfect for you then, Terrence, because we kind of stop around now. We don't trade all day, and you can go get some dinner now. Get ready for dinner, or maybe go out for dinner if you had a good day, a good afternoon trading. We only focus in on the morning hours. The morning hours give us a good bang for our money. I think the trade gets a little bit slippery, a little bit sloppy in the afternoon. Obviously, if there's a big move like there was yesterday, the levels don't even seem to work so well because they kind of blow through them because there's too many fundamentals that are creating the volatility. It's creating the push to the downside. So it's kind of hard to trade that even in the afternoon. And also the trades in the afternoon are a lot less people trading, and the dynamics in the afternoon are different than the morning. So we focus more on the morning hours to give us our opportunities to trade. As we come down here to the 27 area right now. Again, you have to be a little bit careful there because of the prior bar closed at 29, so there's a little bit more risk involved there around the 27. Okay, getting a nice little push here off of the 27, and you got 27 because it got down to 675. Well, that's perfect. Oh, this is really a good way to end the day right now.
Yes.
This is really a good way.
Give us 31, we're good.
Yeah. I'm taking it right now. I'll be happy right now and be done with it. But since I got out, you guys will get the 31. I just got out there because kind of held, stopped, and I just bailed. All right, that's good way. I mean, I got my 27 and my 20 and my 28. So, all right. So that was a good trade there to end our morning here. Again, we are going to have our class later this afternoon at 12 Chicago time. So whatever part of the world you're in, you can figure that out. And if those of you are part of our education course, you're obviously that's part of our education package that we offer. So it's an extra cost to what we have. It's a little bit more personal. It's a little bit more one-on-one, and we show you how to do everything. The course, the goal of our course here is to be able for you to do this stuff on your own without me hanging around. And Rose is part of our class, and she's the one who's going to be taking our course later. She's going to be in our class later. Thanks, Rose. I appreciate that. You can talk to the guy with the sunglasses when he comes in there for that. All right, there again are the levels. We had a nice little run up here against our 27 area. As you can see, we got a nice rotation there against our 27. You got your 4 points there finally. And they didn't take any heat on that. whatsoever. No, it's a nice entry point there. Good way to end the day. Again, you have levels on the downside. You can see the levels that we added on to the downside there in case the market continues to have a little bit of a problem and continues to downtick here, especially on a Friday, right? Friday afternoon. So we shall see what happens. All right, so nice little trade. You know what? If you maybe next week, we can hook you guys up and you can talk. How's that? Okay, sure. All right. So yeah, Rose would be more than glad to talk to you in case that's what you would like. And we'll set that up next week when you come back in, since it's Friday. And all right. So again, if you're trading multiple contracts here, this is a good way to take a little bit. Obviously, you're taking profits like I did, and then if you got something left over, you're managing it here for more than your stop would be really tight. You know, would probably be around 26. And to see if we can get back up, I would say if we get up to the 49.50 area, it'd be a good target. Be a really nice trade if you got anything left over. All right, Rose, we'll see you a couple hours, and everybody, you got the levels again. Don, have a great weekend, and maybe I'll talk to you later if you're in class. If you join us, if you're hanging around, not on your tractor.
I'm fixing to go mow grass.